Hey, Credit Shifu here, and today we are recording from home. I'm trying out these new background. This is some of the Chinese artifacts I inherited from my grandma, and the show is called The Credit Shifu, the Credit Master in Chinese, so we're trying to go with that theme. Anyway, so today we are giving a bit of an introduction to business credit and the differences between business and personal credit and your credit reports. So first of all, let's get started. Now, personal credit is linked to your SSN, your social security number here in the United States. Business credit is linked to your EIN, that stands for Employer Identification Number. Now, if you have registered as an LLC, limited liability company, you will have an EIN. People who are sole proprietors can get an EIN. If they're going to employ people, you can go and register for one, even though you do business in your own name and use your own social security number under normal circumstances. Just another side note, I do encourage people to register as an LLC. There are several advantages of it, and one in particular that has just come in this year. So first of all, the advantages of an LLC, number one is liability. It's called limited liability company or corporation, I'm not sure which, but anyway, it's limited liability, and that limits your liability. So basically, if the company borrows a load of money and goes bankrupt, you don't personally go bankrupt. You're only liable for the amount of investment that you've put into the company, and none of the other debts. That basically the company is the one that is responsible for paying that, and you don't have to screw over your personal credit because of that in most cases, although some credit cards, business credit cards notably, do want personal guarantees. Anyway, we'll come back to that later. Another advantage of an LLC, of course, is the tax deductions. Now, with the Trump tax plan that came in, started at the beginning of this year, LLC income now gets an additional 20% deduction. So if you earn $100,000, you can deduct, you have your personal deduction, which is $24,000 if you're married, two people, joint filing, and then you get an additional 20% off of all of the LLC income that you're getting. So that's actually a huge deduction, could be worth several $1,000s depending on how much you earn. So even if you are a very small business, it might be in your interest to register as an LLC. Anyway, let's get back now to talking about business versus personal credit. So with personal credit, there are 3 credit unions that measure your credit score, and companies can report to for your credit report, okay? And those are Equifax, Experian, and TransUnion. Now, with business credit, there are also 3 credit unions. 2 of them are the same, Equifax and Experian. TransUnion doesn't do business credit, but there is another credit union called Dun & Bradstreet that is one of the 3 major ones. There are actually loads of smaller ones as well, but these are the 3 major ones that you need to know about if we're talking about business credit. Now, to get on the radar of these companies, it is actually best to register with them, and especially with Dun & Bradstreet, you will not get a Dun & Bradstreet credit score, they call it Paydex score, unless you have registered and got your DUNS number from Dun & Bradstreet. And you can do this through their websites. You register your business with them to get on their radar, check that all the information is correct. You can provide, your business phone number and all that kind of stuff, etc. Now, there are also differences between the credit scoring models and also who can look at the credit reports, etc., between business and personal credit. So, first of all, the credit score in general, although these 3 organizations, these 3 credit bureaus use different algorithms and different ways of working it out. In general, the main credit score for businesses goes from 0 to 100, with 0 representing bankruptcy and 100 being really good, okay? With Dun & Bradstreet, this is called their Paydex score. Equifax, Equifax and Experian have their own names for it, etc. But they will actually give you 2 other scores. And these are kind of like financial stress test score, etc., representing different aspects of the risk. Now, I'm not going to go through all these scores in detail because each bureau calls them different things, has different, rating systems, etc. Maybe that will be the topic for another video. But just to let you know, a business credit score isn't just one score. There are normally 2 other scores from the bureau that go along with it. Now, one other important point about business credit is that with personal credit, only you and a select group of parties can actually view your personal credit score, i.e., lenders who are going to check your credit, okay, mortgage originators or credit card companies, whatever. With business credit, it's actually public, so anyone can type in the name of your company and go and view it. Just to give you an example of that, on Equifax's website, I've typed in the name of my company, Generations Media LLC. I'm blurring out the address there, not sure why really, that's public information anyway, you could go and search it. I don't live at that address, by the way, just in case you're thinking you're paying me a visit. But anyway, you type in my company's name and it comes up, and then you click in and you can see that there are several different types of credit reports that you can buy for a price. So basically anyone can go in there and look at a company's credit score and credit report and information, etc. And one last point about the business credit scores is that there are not as good legal protections for business credit score reporting, so it can be harder to actually dispute things that are on your report because these credit bureaus can actually just ignore you, whereas with the personal ones, they are legally required to at least respond to you, even though with personal stuff, it can be hard to get stuff removed as well. But with business stuff, it's harder. You have less legal protection. With business and personal credit scores, it is advantageous to keep your business credit and your personal credit separate. And what we mean by this is not putting loads of business expenses or business bills on personal credit cards. It's better to have a business credit card, a business bank account, all that kind of stuff to take care of business things, especially if you're doing an LLC where it's limited liability and you do not want to be personally liable for stuff. You can separate it. Now, let's talk about why we want to develop our business credit score. And it should be kind of obvious, but we're going to go through it anyway. Now, while many small business credit cards do require personal guarantee, like if we look at the terms and conditions of the Chase Inc. Preferred, it's very obvious that they are saying that in addition to your company being liable, you are personally liable for paying off the card, okay? That's something kind of unavoidable with many small business credit cards. But if you are applying for other business loan products or credit products or whatever, and you have developed your business credit score, you typically won't need a personal guarantee because they're going off your business's credit report. And we have then separated our personal and business credit, and we don't actually have to provide our SSN. We can just provide our EIN. So then we can't be held personally liable. Our personal credit cannot be impacted for the company's business decisions or money that it owes. And obviously the better you have developed your business credit score, the higher score you have, the better deals you can have, and that could be better rates, interest rates on business lines of credit, loans, etc. Also, better rates on a lease for an office, perhaps a smaller security deposit when you're renting an office, better terms with vendors that you're setting up accounts with, etc. So, you can think about it just like how a personal credit score may affect your life with a business. Is the same thing. So how do we actually develop our business credit score? Well, there are several things that you can do. The big one is, setting up accounts with vendors that your business then pays. Depending on the companies, these may or may not report to the bureaus. So if you want to guarantee reporting to the bureaus, you could do something like taking out a business loan, okay, or establishing a business line of credit with your bank. In addition to that, taking out a small business credit card, which will report to the credit bureaus every month. And like that, you can start developing your business credit. Now, developing business credit, actually, it's a little bit simpler than personal credit. There are less factors. And the credit bureaus, while I'm not going to go into super detail here, the credit bureaus say the best thing you can do is just paying on time or early. And that will give the best, developing your business credit score. Now, there are several different types of business credit you can get. We have business lines of credit, which are just basically kind of like loans from the bank that you can just draw from that line of credit, put it as cash into your bank account, and then you can use it, your business bank account, mind you, and you can then use it for developing your business and etc. You will be charged interest on it, but typically it's at a much lower rate than a credit card, okay? So this is something that you realistically would borrow from, okay? Use for loans for establishing your business and pay it off over time. Then we have business credit cards, which is sort of general purpose business spending. You ideally would be paying it off every month, but it's not a big deal. If you have to roll it over to the next month, you will pay interest at typically a higher rate of APR. So this would be good also for general spending, but not intending on going into debt. debt would be, just rolling over to the next month would be an emergency thing. Then lastly, we have business charge cards, which, like personal charge cards, you have to pay them off every month. And this would be for, things where you absolutely will pay that money back at the end of the month. There's not really any room for error unless you get the Amex Plum card, which does let you roll over some to the next month. We've got a video about that as well, Amex Business Charge Cards, which one's right for you. So charge cards, you have to pay them off basically, apart from the Plum card. And with this, the emphasis could be on rewards. I know, the Amex Business Platinum has a 100,000 point sign-up bonus. Very, very good. Etc. So let's talk now about applying for business credit cards and charge cards. Sorry if you can hear that outside. I think there's a gardener mowing some lawns or something. Anyway, so applying for business cards and charge cards, what you should know, there are a few little differences. So my number one difference is that you don't have the same consumer protections guaranteed by the Card Act of 2009 that the personal cards have, okay? That just covered personal cards. So for example, things like the APR can change overnight and go much higher. However, some issuers do actually, as a courtesy, extend those protections to small businesses, but it isn't everyone. So that's just something to be aware of. Second point is that some business cards do actually report to your personal credit, and so do have an impact on your personal credit, and some don't. But it's not guaranteed. If something bad happens, like you're, not paying it off or something, that actually might show up on your personal credit report as well. It's not guaranteed. Next point is that the credit limits, the bonuses, and also the spending requirements for those bonuses are typically higher than on personal credit cards. And, that's kind of obvious, but we're going to say that anyway. Typically because, a business may bring in hundreds of thousands of dollars a year, but not all of that is your income, because you have to buy products in order to sell and then get a profit margin on. Maybe your margin is 40%, 30%, whatever. So business cards can see a lot of cash flow going through them, and thus they have high limits and higher spending requirements. Last point is that the rewards on business cards can be different. They can often have categories that are geared towards business spending. For example, rewards categories for postage, for things like office supplies, things that businesses would typically spend money on. And some of these cards you can actually choose your categories as well, depending on what your business does. So there really are quite a lot of different options out there. All right, guys, that is just a little bit of an introduction to business cards. I covered, a huge broad range of stuff in that video, so we really didn't go into detail in any one aspect. We may do some more videos looking at, looking much further into the business credit scoring, the three bureaus, the three different types of scores that each one gives. Also looking at the top business credit cards out there, etc. If you want to get a head start and check out some of the best business cards out there this month, you can check out the link in the description from our partners at creditcards.com and browse through, learn more about some of the best business credit cards. I have been the Credit Shifu. Please subscribe for more credit card tips and tricks almost every day, and we will see you next time. Bye-bye.